Before an execution of a trade that you'd like to take, whether you want to take a buy or you want to take a sell, you have to make sure the following are in check. You have to make sure you have gotten your direction right. You have to make sure you have confluences in place that give you the structure, because we use the same confluences to identify also the structure that we are going to use. Then you have to make sure that there's a change of trend. Most of us focus so much on taking trades without identifying whether there's a change of trend or the market is still going the opposite direction that we want to down that we want to take. Then also, if you want to get a better risk to reward ratio, I've spoken about this in the previous video that I put up here. You have to make sure that you refine your entries. So these are the following steps that we're going to go through today, and they're going to help you to be able to take a better trades. Maybe you can identify even better setups, high probability setups. Most of you are taking setups that are half-baked. So in order for you to take high probability setups or to get better trades that are going to give you high risk to reward ratios, also are going to minimize your losses, make sure these steps are in check. Hello everyone, this is Paul from the APN Academy. So in this particular video, we're going to be looking at the 4-step process that you should use to find the best setups or the trades that you want to take, right? So we have a specific criteria that you have to follow in order to get good or high probability setups. Are we together? So as usual, if it's your first time coming across any of the videos, particularly this one here, as you're watching, usually we first go through the theory and then we go through the practical bit of it. We show you exactly what we have done. Why do we start with theory? It's because we want you to understand what we're going to implement. I'm not just going to show you on the charts. It may confuse you. So let's first go through it theoretically, and then I'll show you on the charts how you're going to implement these 4 steps, right? So the first one that we're going to be talking about is direction. Let's go a little bit deeper into it. Now, remember, I've talked about this several times, and in almost every video where we have done analysis, we have to first identify direction. Where do we want to go? How are you going to get direction? It's through the trend. Where is the market trending? What does trending mean? Trending means what is exactly happening in the market at that particular time. Now, most of us, when we are marking levels, or support and resistance, or we're marking order blocks, we're interested in what happened historically behind the side, right? We want to mark or find touching points. Maybe it's what most of the books are saying, but of course, we have all seen that 95% of people lose money. Why are they losing money? Because this is the same information people are using. Either they're using it wrongly or they don't know how to implement it. So do not look far behind in history, like you want to join very many turning points. You have to specifically focus on what is happening in the market. For example, if the market is making higher highs and higher lows, focus on what is giving you a possible support and resistance. Exactly where price is. For example, if price is here, and let me just draw this properly. If price has made a high, a low, a high, so just focus on price is turning at this current price. This is the turning point. So just focus on what the turning points price has created currently. This is a previous higher high, which has become now support. This is a resistance. Focus on this. You will only focus on what is below here. When the market breaks below this one, then this one becomes a new support, this one a resistance. Do not focus so much behind. When you keep marking many things on your chart, they're going to confuse you, right? So we identify what the market is doing at a particular time with what we are seeing. If the market is making lower lows, lower highs, lower lows, lower highs, we know that we're in a downtrend. Now, it is up to us to decide that since we're in an uptrend, for example, we're going upwards, where do we want to trade from? Since the market is here, am I going to trade the pullback? Or I'm going to wait for the market to come here, and then I go with a continuation. That's the next stage. But right now, we have to first identify the direction. Is it upward or downwards? The same applies for downward movement. When the market makes a low, makes a lower high, makes a lower low, makes a lower high, and currently we are here. So it's up to us. We know that the market has to go back and retest this point here. Or for those who trade order blocks, we know that we have to retest a certain order block here. As long as this point is not broken, we know that we are still continuing a downtrend. So it's up to you to decide that, am I going to trade from here to here or from here to here? Or I'm going to wait for the market to come back here to retest this previous low to continue down, or wait for it to come back to this order block to continue downwards. Why am I mentioning people who trade order blocks and the rest, or any other type of tradings? Because whatever we teach you on this channel, you can implement it on whatever you want to trade, whatever trading style that you have. Because this is pure market structure. You can use it to trade anything you want, whether you're trading cryptos, whether you're trading stocks. It doesn't matter. As long as you're following this, you can be able to trade anything that has price movement. Then also you can be able to trade a type of market that is moving sideways. By sideways, we're making equal highs and equal lows, right? The market makes a high, makes a low, makes a high, makes a low. So if the market is creating structure here and a structure here, you can be able to trade from this structure to the structure that was here, from this structure to the structure that's created here, as long as they're not tested. That's how we trade a sideways movement. We shall have a full video on this, because also they can be able to provide for you opportunity to make a great or good money in the market. because most people, I know that they tell you to avoid them. Actually, I also advise to avoid them in case you do not have enough experience in the market, right? So this is how we get direction. Is the market trending upwards or downwards? When we're trending upwards, we're making higher highs and higher lows. When we're trading downwards, we're making lower lows and lower highs, right? When you're trading sideways, we're making equal highs and equal lows. So this is how I identify direction. First, identify the direction, then you determine, right? Determine where you want to trade from. If I make a high, low, high, and I'm here, determine, am I trading from here to here? This is what we call reversal trading. Or I'm waiting for the market to come here, then I continue up with it. This is called a continuation trading style. So you have to decide that. Now, the next thing that you have to put into consideration, this is the first one. The second one is we have to look at confluences or structures. This is what I just explained after identifying direction, whether you're trading upwards or downwards. What do you want to trade? Is there a continuation that you're waiting for? For example, let's say we break downwards, the market makes a low, makes a high, then we come and we break downwards, right? Now, we have to determine, are we going to trade a continuation? If we're trading a continuation, meaning that my area of interest is going to be this one here, because I want the market to come here or here before I can look for change of trend to look for a continuation downwards, right? Because I'm continuing with the trend, the direction I go towards a sell. So I have to wait for until the market is giving me an opportunity to sell. Again, I should not identify a direction that is a sell and I'm looking for buys. Are you getting it? So if I'm to identify a buy direction, I should be looking for buys if I'm trading the continuation. That's how continuation traders do trade. Now, there are people who trade specifically breakouts. How do they do it? For example, if I have a breakout of a trend line, the first touch, second touch, third touch, here, the market goes up and comes back down, we break this trend line. We have to identify a structure that the market has broken, either the turning point here, the higher low, plus the trend line. On a retracement, which I've told you guys the rules of breakouts is we want a weak momentum retracement, then we can look for our sell. There are people who trade momentums in momentum breaks in the breakout phase, whereby the market, if the breaks aggressively, they're just going to place their trades and then they go. This one is a bit for experienced traders. So if you're not very, very well experienced, I advise you wait for the second step, which is a weak retest momentum. Then you can be able to take your trade. Now, we also have confluences of pullbacks. Now, pullbacks are, for example, let's say we have a market that was going upwards, low, then it breaks this. Those people who trade the market from here to bring it downwards. This is what we call a pullback. So you have to make sure that you know your confluence that you're trading or the structure that you're trading. Do we have a breakout here? Then can you be able to take this? Or you're a trader who is going to wait for a continuation, like I've mentioned first. Continuation, we have breakout people who are trading this breakout here, right? When the market breaks here, are you waiting for the week retest to it and then you continue with it? Or you're waiting for the continuation to come back, or you're going to come back and trade with this. Now, on top of this, we also have what we call indicators, right? We have indicators here, and also we have the Fibonacci, the Fib tool, right? So now the Fib tool is where the market creates impulses. For example, if we have a higher high, higher low, now the normal market is going to break and retest here. But where we implement the Fib, I've spoken about it on a channel here. Make sure you find a Fib video. When the market breaks aggressively, gives us a very big distance between this break and this high that the turning point that the market has created, right? So in most cases, the market may not come back down here. I know most of you are victims. You've been waiting for the market to come back down here, and it doesn't. What does it do instead? It comes, stops somewhere here, and then it continues. Why is it like that? Because we have hidden levels of support and resistances that are created to us using the Fibonacci retracement tool. Are we together? So that can be also a confluence when you're trading. And also some people have confluences of indicators. For example, we have the RSIs, we have the moving averages, we have the MACDs. Depending on the one that you use, do not rely on them, but use them as confluences. Do not base your trading on the indicators, but they can help you in a confluence of identifying either entries or structures, right? So confluence and structure go hand in hand, right? For example, if I have a W, I'm just going to give an example. If I have a W here, the market has broken this turning point. So I'm going to expect the market to come back and retest this point here. So it's confluencing. If you're waiting for a continuation, this is your point of waiting, then to continue. If you're waiting for a breakout, still, you can either take the trade here for it to move upwards, or you can wait for the weekly retest momentum here, and then you can take your trade. Or you're waiting for you're trading pullbacks, like I've said. You're trading from up here up to down here. So it's up to you to decide that I'm going to use this style here. Now, this is the second thing that you need to put in your mind when you want to get a high probability trade. Now, the third one is the entry. We know that right now we have our direction. Our direction is a buy, meaning we have to look for buys. Also, the structure, which was number 2, the structure has to give me buy moves. For example, if I have a W, I have to wait for the market to come back down here. Now, this is a type of trader who is doing a continuation. So I have to push for it there. Or if you want to just, you're a pullback trader, you can take it from here. Then you, as long as you know the structure that you're trading, right? Now, this is the third. Now, the third one is when the market reaches out, what are we going to do? We are going to be looking for the trade that we have identified, either buys or sells. Are we together? Now, what people don't normally emphasize, or what traders don't normally put their emphasis on, is there must be a change of trend, right? Most of you are taking trades, you're delaying drawdowns, emotions come in. Why? Because you're still taking trades. For example, if the market makes a low, lower high, lower low, most people are taking trades when the market, if you want to trade this pullback, most people want to take sniper entries when the market's still going down. The market can easily continue going down. Then you take a buy. Here it hits all your stop losses. You keep getting frustrated. You start making decisions based on emotions, right? So even if it is down here, wait for the market to shift from a move, a sell downwards to a buy. We're going to see all these on the charts. Are we together? And then also we do have, for example, if the market is, let's say, going upwards, we make a high, a higher low, a high. Now, people want to get sniper entries. Maybe they have their level they have drawn somewhere. The market can go beyond this level here, and then it starts giving us a push downwards when it has triggered all your stop losses. Why? Because you're looking for a sell in a market that is still moving upwards. What am I trying to talk about? I'm trying to say that do not look for a sell when the market is still going upwards. Look for a sell when the market has given you a change of trend, when the market has told you, I'm ready to go down. Or if you're in a sell, do not look for a buy when the market has not told you that, or has not shown you that I'm ready now to go upwards. That's what we mean by change of trend, changing from the original direction, which is selling, to the one that you want to take, or changing from original direction, which is a buy, to the one that you want to take, which is a sell. Are we together? So this is the next one, which is entries. We're going to show you all this on the charts. Make sure you stick until the end. Now, this other one is what we call refining the entry. If you're to take entries and you want to get a better risk-reward ratio, make sure that you refine your entries. I'll just give you an example. If, let's say, I get my direction from monthly, right, and I take my entry from, I take my structure from weekly, then I take my entry from H4, right? My entry is going to come from H4, but I have to refine it. I have to get a better entry, and that is going to give me a higher number of profits or a higher number of pips, right? For example, I'll go to H1 to refine. In yesterday's video, or the video that was previously updated on the channel here, just the one immediate behind this one here, there's a video about importance of time frames. Make sure you watch it. It will make more sense. But briefly, this is what I mean by refining your entry. You take your direction from monthly. For example, I'm not saying you should use this, but also we showed you how to choose time frames in that video. So make sure you watch it and utilize it. Also, I'm going to put it in the card around up. You can just check in the card up there. Then structure is in weekly. This is following exactly what I'm telling you in this video. You have to first get direction, you get structure and confluences, then you can get your entry. Then this one is your refining. So make sure these are the steps that you have: direction, structure, entry, and refining, right? So I hope this has really made sense to you, but this is all theory, and you know trading is not about theory. Trading is about doing. So without wasting time, let's just go to the charts and I show you practically how you come to getting these high probability trades using the steps that I've just shown you: direction, confluence and structure, entry, and then you refine your trade, right? Those who are in our public Telegram channel, you saw this trade that I'm going to show you. It was GBP USD. I sent you the analysis last week before the week started, and let's see how exactly it played out and how we took our entries on GBP USD, right? So let's go to the chart. Okay, so like I mentioned earlier, this is the chart of GBP USD. I'm just going to show you the process of by which we used to do the analysis of GBP USD, which we posted in the group. Those who are in the group can bear witness to this setup that we shared, and also how we took the trade, because we took this buy setup on GBP USD. So we're going to show you the process. Remember, the process is direction. After direction, you need to have confluence and structure. After that, you need to have entry and change of trend. And after that, you have to refine your trade. So we need the direction, we need the confluence and structure, we need the entry, and then we need to refine our entry. These are the the steps that we are going to follow, the 4 steps that we are going to follow, right? So our direction is going to come from what time frame? Our direction is coming from monthly. Our structure and confluence is coming from what time frame? It's coming from weekly. Our entry is coming from H4, and our refine is going to come from H1. This is the step that we're following, right? Just exactly what I've showed you in the video is what we do to take our trades. Please, please, please do not copy these time frames, because we showed you how to get your own time frames. Make sure you have a time frame that gives you direction, gives you the structure and confluence, then where you get your entry from and where you can refine, right? This is what is okay with me. Make sure you get what is okay with you, right? Do not copy anyone. Do not copy any trader because they are making money or what. Make sure you copy what is comfortable for you and what you feel will work for you. So starting from monthly, we observe that the market had reached a resistance here. This structure here is a resistance. It's giving us a resistance, but also we can clearly observe that the market had just broken above this structure here. So we needed a retest. So what is the direction? The direction is, since we're at resistance, we need to be looking for sales from up here into this area here, right? If you want to trade continuation, or if you want to trade, reversal, which is this from up here to down here. If you want to trade continuation, you trade from here up to up. So in this, we wanted to trade the continuation because the setup that we shared, we wanted the market to come back down here, and then we look for the buy. So meaning that we're not going to be interested. So what's the direction? We're going to have a sell, then we're going to have a buy from here. So as a trader, depending on the type of your trading, you have to determine, am I going to trade from here, or I'm going to wait for it to come down here? Are we together? So now let's go down to where we get our structure from. We have said we're getting the structure from weekly, since we are going to hold it for a swing, right? Now this is how weekly also looks like. Weekly is agreeing with monthly. So this is the structure of weekly here, right? It's approaching resistance here, right? Now also in weekly, we have just broken this previous resistance level, which is now support, and we need the market to come back and retest here. Now when you go down to daily, what do you observe in daily? Now in daily, we do also observe that the market, let me just delete this so that we can see clearly. The market has already provided to us a W here. Remember, I told you guys that if you cannot see these structures in the candlestick chart, make sure you go to the line chart. When you go to the line chart, it will be able to show you that this was a W. The market came down, went up, came down, went up, right? So let me just delete this so that you can see it well. The market created for us a W here. So what does it mean? It means that we need the market to come back and retest this structure that it had created. So let's go back to candles. You'll see. So the market created this W here, right? And then it came down. Instead of retesting, it was supposed to stop here, and then it pushes up, but it broke down, giving us a false breakout. And you guys know that when a false breakout happens, what we want, when we break back again upwards, we want it to be retested. So the market gave us a retest here, but not a proper retest. So we expect still the market to come down, right? So the alignment of monthly, weekly, and daily are speaking the same thing. We first expect a sell, then we push upwards, right? So those who are going to be trading retracements or reversals are going to be taking their trades from here. And those who are going to be trading continuation, we wait for the market to come down here, and then we push upwards, right? But like I've mentioned, we're interested in the continuation upwards since the market is an uptrend. So we're going to be waiting for it to come down here. Now, let's go to our entry time frame. What do we have? Our entry time frame is also showing us that we do have structures below here that the market actually did not test. The market kept breaking them, but did not test them. So aligning properly with our setup here, these are the areas that we expect the market to come to that are going to act as our confluence, this area here. So let's see how the market plays out. Those who are going to look for sales here, you can look for break of structure here. This will be your entry at this point here, right? And then you can refine in H1, right? You go to H1, then you can refine it because the market, actually it already broke down from here. You could have taken entry from here. Those people are aggressive traders. Then you wait for it. If you trade pullbacks, it would have come back to retest here. Your entry would be here. Those who are aggressive traders will take their entries from here. So you'd have an entry here. And also you'd have, of course, your stop loss will be above the structure here that the market could possibly retest, this one here. And also your second entry, this will be your target around here, this area. Then also your second entry could be just in this area here, your stop loss above this structure, the market could retest here. So this is how those people who trade retracements would play out, right? And your target would be hit for the two entries, right? But like I've said that for us, we're not interested in in this retracement backwards. We're interested in trading the continuation. So since it has reached our area, what are we going to look for? We're now going to look for the entry. We have our direction. We have our structure where we want the market to come to. And then also we know what exactly we want to, the time frame exactly in which we want to take our trade. So we have this trend, the market is moving downwards. Like I say that most people will take their trades when it is still going down. Well, you're looking for a buy, but because it has touched your area and plus an engulfing, you want to take the buy immediately. So you may end up taking a buy, let's say from here, and then the market plays around, you catch emotions, maybe even triggers your stop loss around this area. Then you start wanting to revenge trade, you start getting greedy, and that's how people start blowing accounts. So to avoid all this, we have this market that's making lower lows, lower highs. You can clearly observe from here, the market is simply making lower lows and lower highs, right? Let me just change the color to purple, right? Again, it broke this point here and made lower lows and lower highs, right? So it came back here, made this lower low here. So it has kind of broken above. Now, this is where people get it wrong. We have a confluence of our trend line here, which the market has not yet broken. So we need the market first to break it, then we shall make much more sense out of it, right? So as we stand right now, the market is still bearish. We who are waiting for continuation, we cannot take a trade. So let's wait for the market to break our confluence. On a weekly test, then we can be able to take our trade. So let's see what the market does. It was held there around that point, right? And then it came back down into this point and it broke, and also it's also above the trend line. So now there are two types of traders here. Those that are going to take their trade after this rejecting pin bar here. Where is our target? Our target is we want the market to come into this blue resistance area here because we're in an uptrend. This is going to be our first target, right? Then the second person is going to take his or her trade above this next one. All these will be entry levels. So let's wait and see how the market plays. Of course, I want my stop loss to be below the rejecting structures there. So the next entry will be above that point. The next entry is going to be here. When the market came back to retest this point here, you can put either a buy limit, or you can wait for the market to break above here to put a buy stop, depending on how you trade. So this will be our second entry here in case you want to have a number of entries. So also the target is going to be the same. We'll just adjust the stop loss to structure because we have at liberty, as long as it's minimally 1 to 3, right? So either you can wait to put your stop loss depending on your style and the rules that you trade with. You can wait to put a stop loss until the market breaks a structure, because the market has just started trending now upwards, right? Personally, I usually wait for the market to first trend, like to create 2 highs or at least 1 high. Then when it's coming to retest it, then I can identify a stop loss area. So depending on your rules, you can just do how you follow your rules. But these are the rules that you have to follow to get a high probability trade, and so that you do not get a very, very big drawdown. And also it brings you, or it leads you to emotions, and you start going to the factors that lead people to say trading is a scam, or makes you take long to identify or to realize your consistency. So you can clearly see that you did not go so much into a drawdown, right? You didn't go so much into a drawdown, and the market moved into your direction, and you have currently you're running into a very big risk to reward ratio. So you can go either risk free, you can protect your trades, and then you can see this. So to take such trades, make sure, just a reminder, make sure you're following these steps. Make sure you have direction, make sure you have confluence and structure, the time frame that will give you the time frame for direction, time frame for confluence and structure, or make sure you identify the direction, make sure you identify structure. After that, identify entry, right? After identifying entry, make sure you refine it. Now, I've not spoken about the aspect of refining. Now, I've not overemphasized it. Now, remember we got our levels from H4. These levels where we got them from, let me just go back slightly here to H4 here, because we wanted the market first touch our area here. Let me just increase here. Wanted the market first touch this area. The moment touch this area is when we can go and start refining to get a better risk to reward ratio. But if we're waiting for H4, meaning that our entries would have been above this point here. Let me just change the color to red, right? The reason why I went straight into H1, sorry, I shifted because it's my process, so I'm just so much used to it. So our entry would have been above this area. Now check the difference. This would have been your entry if you had used the original entry time frame, which is H4. But if you had just used H4 to touch your area of entry that you're interested in, then you look for change of trend in a refining time frame, you would have a much better entry. You see this? When we took our entries from here and here. So by the time this person of H4 is taking this trade, we're already in. risk-free mode, and it's going to hit our take profits. So these are the steps that you need to follow: direction, structure or confluence, and then you need to get entry. Then also you need to refine your trades, and you always have high probability trades. I really hope this made sense to you, and if it did, make sure you give us a thumbs up button, and if it was your first time coming across the channel, make sure you subscribe for more content like this. Have a great time.